Kendall from Investec Wealth, welcome to FundForum International. What are you hoping to hear about here this week?
What am I hoping to hear about? I'm hoping to hear that product providers understand the pressures that we as wealth managers are under in terms of fee compression, in terms of the requirements of the investor becoming far more demanding from an income perspective, given the interest rate environment and given the difficulty we have in understanding and navigating the world economy as it stands at the moment.
What conversations have you been having already today along those lines?
We've been talking to a number of people about how we can risk-proof our portfolios. Duration management for a fixed income investor is a key attribute of what we do, a key signal for how we run our money. If a product provider is able to give us the options of taking duration from them or hedging that duration and having a hedged duration product, then it leaves us with the capability and the options to choose between those products. And I think they get that, they understand that. The more sophisticated fund managers do, at least. So.
There's been a lot of talk today about long-termism in the industry. What does that mean to you, and what does that phrase conjure, if you like?
Long-termism, well, I've been around for quite a long time now. And have survived the slings and arrows, maybe, about the outrageous fortunes of the fund management industry. But on a more serious note, I think it demonstrates that the business is going through significant change. Up until very recently, the pricing model for product providers and for intermediaries was defined by retrocession, defined by the amount of rebate that they were able to receive before they passed on the benefit of the investment to the client. That clearly has to change, and I think in the UK, where the majority of our business is done, we have been at the forefront of looking to be entirely transparent with our clients on exactly how much they're paying for a service and what they're getting for that service. The bad old days of hidden retrocession and distributor fees that actually destroy the value for the client have now gone. And it would be, I think, the rest of Europe will follow suit. The writing is on the wall for the bad providers that were in the market, and so therefore I think this conference has been materially about what happens in the future in that respect, and I think that's important. It's a frank conversation.
And realistically, do you think this industry will embrace it and collaboratively go forward with that?
I don't think they'll have a choice, because if they don't do it, then the regulatory environment will change to make them change.
Do you think this conference provides an environment for real change like that? Lots of countries represented, lots of people coming together internationally, globally.
Yes. Well, I'm biased because before I joined a UK business, I was predominantly working with Swiss, French and Italian distribution channels. And so it's always a joy to come to a conference such as this, where I see some old pals and I see some friends who've moved on to different parts of the industry, but we are all here this week. So that's always a great joy for me. I think the sharing of ideas across regional boundaries is very important. We've got a lot of American counterparts here this week. We have Swiss, we have Italian, we have French, we have German, we have UK and Irish. And I think, I hope I haven't forgotten anyone, but I think it's important for that cross-fertilisation of ideas. Not that we're homogenised, we don't all want to be the same, but we can offer a variety within a framework that is suitable for us all to operate.
One of the topics that's come up this week here is what is invested in, and one of the topics is infrastructure, sort of globally responsible investment. How much do you see from your clients about how important that is to them? Is it a topic?
Infrastructure has been an important part of our portfolios for a number of years. We have a number of investments that we have taken very considerable percentage investments in, that because they give us a low volatility, considered and reasonably, I'm not going to use the word guaranteed, but a reasonably certain level of income for the type of client that we have. We are a wealth manager. Our clients regularly come to us and say they don't want to take much risk, but they need an income. Infrastructure products, infrastructure debt in particular, does offer that kind of profile that is attractive for those kind of clients.
Is it attractive? Do you hear, maybe it's amongst a younger generation, but do you hear much desire for sort of socially responsible product as well?
We do have some requirements, and we do allow for socially responsible investing within our panel of funds that we have available. What I will say, and this is probably going to be unpopular with the SRI fraternity, is that the variety of funds available and the screening process is so diverse and so unspecific to a particular requirement that if I were an ethical investor looking for a fund, I would find it very difficult to find consistency to then compare.
Do you think that needs to change? Is that about transparency?
It's going to be difficult to change. I would like to add that I think some European counterparts are better at it than the UK side, which again probably isn't something that is attractive for people to hear. But the area is so diverse, it's very difficult to, again, using the word homogenise for that requirement. How we approach it is that we explain exactly what you're getting from that investment. So the standard avoidance of weapons, tobacco, drinks companies, pornography, and animal testing, which are generally the five filters that are used. We look at the core basic requirement for the funds, but we will caveat that by saying, well, actually, some funds do invest in investment companies that might invest in tobacco, and they have to be aware of that.
Dawn, Kendall, thank you very much for joining us.